Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Wednesday, December 20th, 2023. Let's take a look at the charts. We always start with the big picture and work our way into the day itself. The big picture, the long-term trends, the undercurrent of the market, the updraft that has existed really since May, the buy signal that occurred above 164.39 to 165.81, an area we revisited several months ago, held beautifully, and following that testing, that retesting of long-term support, we settled above this channel top at 182.32 that set off a secondary buy signal all along, anticipating 233.56 as our next long-term objective that I think 3 to 5 months from now is realistic. But I've been saying that since May. But I do think it is especially realistic following the recent settlement above 182.32. And that is the big picture. Let's take a look at the daily chart that has a lot to say about today, 196.19. The simple 2-week channel bottom contained selling pressures on Monday, can continue to do so on Wednesday, and above which 198.23 is likely today. 197.01 offers a decent upside intraday pivot point, able to contain intraday buying pressures, below which 196.19 in reach, above which 198.23. Now 198.23, the July 23 all-time high, previous all-time high I should say, we took that out last Thursday, we have yet to close above 198.23. And in fact, if we do close today above 198.23 Wednesday, I do see this channel top once again in reach within 2 to 3 to 5 days, 202.40 weekly resistance. This is a channel top that we actually did test last Thursday. And can continue to contain weekly buying pressures. But as we move into late week, and we're at midweek now, but as we move into Thursday, Friday, I do think I'm going to reverse all that. Friday, certainly, 198.23 will become a weekly 3-star resistance area that if settled above 198.23, that July high, at the end of a week, which we've yet to do, that should set off yet another secondary buy signal, 202.40, then likely under that scenario within 3 to 5 days, and 209.42 within 3 to 5 weeks, so forth and so on, once again up to our 233.56 long-term target that I'm expecting by some point in 2024. And I do think 3 to 5 months remains realistic, especially if we can close this week Friday above that 198.23 previous all-time high. So let's take a look at the downside today, that if we break or open below 196.19, we could actually test 192.80 intraday. The other scenario is merely closing below 196.19, should yield then 192.80 tomorrow, Thursday, where we could bottom out not only for the week, but through next week and even through January perhaps. There's a case to be made that holding above 192.80 maintains bullish momentum through January. And from here, we can retest and take out, close above 198.23, and then we should see meaningful gains as we move into January trade. So 192.80 is a level that can contain weekly selling pressures, quite possibly through January trade. And whether or not we unwind all the way back into the low 180s long-term support, I think has everything to do with if we close sooner than later below this 192.80 channel bottom. So day traders, 196.19 support, buyable, 198.23 resistance, sellable. 3 to 5 day swing traders, you could have a go at 196.19, but in terms of aggressive buying on a 3 to 5 day swing trade, I think that's 192.80, back to 198.23. Closing above 198.23, I'm going to say on Friday for sure, would be a 3 to 5 day swing trade to the upside. But for right now, we could close above 198.23 today, Wednesday, and Thursday, Friday rally to 202.40 and perhaps fall back to close the week below 198.23. So I think this deserves one more day before bumping 198.23 up to a 3-star resistance area. Once again, if you want to play the short side, into January, I think that presents with a settlement today below 192.80, which I don't see happening. I don't think you do either, but it is certainly possible that by Friday's close, we settle below 192.80. And then you've got sort of an opportunity. Well, let's put it this way. No good reason to be long Apple into January trade if we close soon below the 192.80 formation. And in fact, those of you who like playing both sides of the market should consider reaching for 180 out of the money puts that don't expire for at least a month, because I think that is the setup. The low 180s then a solid buy opportunity as we move through the first quarter. From here we can round back up to new highs within a matter of a month or two. But that scenario I don't expect unless we close below 192.80. Until then, bullish momentum remains firmly intact into possibly through January above 192.80. In fact, 192.80 probably deserves a 4-star multi-week weighting rather than just the 3 stars that we show now. I don't think there's really anything that needs to be added beyond what I've already said. So I'm going to leave it at that for Wednesday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. We just put out a stock pick on Tuesday in Trade Desk. You might be familiar with it. Large cap corporation showing opportunities now that you may want to make yourself available to by signing up for wickedstocks.com. That 5-day free trial will let you see it and our recent stock picks over the last few weeks that are still relevant. That's all I've got. I'll be back tomorrow with Thursday's Apple Report. You have a great day.